And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. This is the show where we bring you where the price action is in the broader markets. We did still have some impact from mega cap names that reported earnings last week. We're at the tail end of earnings season, but still impactful there. Also on Wednesday, Fed Chair Powell did testify in front of Congress, and his comments were highly anticipated, but not a lot of surprise there. He did repeat what many Fed governors have been talking about, as well as FOMC meeting notes, and that is that the Fed is not quite ready to cut interest rates yet. They need more proof. Now, we did get more by way of data on Friday. Today, employment numbers very closely watched, but not a lot by way of surprises there. We did see a lot of new jobs were created. Not great news because the Fed wants the economy to at least stay steady, not grow. However, unemployment levels increased. So we had a balancing out there, and then wages, no real pressure. So not a lot of real news in relation to inflation and the potential rate cut. Now, we do get key inflation data next week. Core CPI and PPI data will be released, and these numbers are still going to be closely watched. Investors want to know, will we see interest rates be cut potentially in the third quarter, or will it be moved out to that fourth quarter? It's going to have a lot of impact elsewhere in the markets as well. So let's go ahead and jump right in, take a look at where the markets closed for the week. Here we are with the daily price chart of the S&P 500. And as you can see, we did pull back slightly last week. However, the broader markets remain in a confirmed uptrend above this upward trending 10-day simple moving average. The RSI still in positive territory, as is the MACD. So in essence, this near-term uptrend in the broader markets does remain in place. Now, from here, I do want to share with you a view of the equal weighted S&P 500. And for those of you not familiar, rather than those magnificent seven FANG type names having a big impact on the broader markets, this index does equal weight each of the underlying stocks in this index. And take a look, it was up 1.1% this week. That's relative to the broader S&P markets down 0.2. So this is what we want to see. There has been a broadening out of the markets over the last several weeks, but most pronounced this week, of course, because we did see a lot of deterioration in some of those bigger names. And from here, I will go ahead and share with you, we'll get into that sector view, take a look at some of the movement that is beginning to shape up in the markets, again, with that sector view. So let's dive right in and take a look. This is a 2-month daily price chart view of the 11 sectors in the S&P 500. I've added that relative strength indicator and then sorted it in descending. And it's not going to take a lot to as far as seeing where the movement is, because first up, for me, that beacon or that really sound area that I'm going to be keeping a close eye on is technology. This is where those growth stocks reside. It's been an area that has led the markets higher. And let's take a look. It's down here in this lower quartile, as are communication services and consumer discretionary. These are your three growth horsemen, if I may, and they are down in this weaker quartile. Let's just take a quick look here. I will start with communication services. Of course, Meta Platforms is a big holding here. Alphabet, Google, which has been struggling of late. NVIDIA is in here as well. But here we are with a view, and we are seeing a lot of back and fill price action. And this is actually a very good thing because it is allowing this once leading sector to ideally set up for another leg up at some point in time. We're going to be on the lookout for a breakout and then ideally get this MACD black line up through the red, indicating a move higher among these communication and mostly internet related stocks. Let's take a quick look here at technology, bouncing around, lots of volatility. We're going to get into that as far as what drove it and where, but you can see as well a little bit more by way of volatile, but we are seeing that back and fill type of price action. While it may be painful for those of you that are overweighted in those tech names, it really is much needed so that, again, we can set up for a potential another leg up. Let's take a look at consumer discretionary. This was the worst performer, down 2.6%. Tesla down 13.5% last week. Lots of selling there on news about reduced EV sales to China. But also, we did have other areas of weakness that we're going to get into in this consumer discretionary, just hanging on here to this view of that RSI at that 51 level, but we did get that MACD black line down through the red, indicating that we may struggle a little bit longer here. And again, we'll get into some of those names. So from here, we of course want to be aware of where that relative outperformance is. And up at the forefront, financials front and center. Bank stocks having a very good week, up 4%. As we move through, I'm going to share with you how you can screen for viable bank stock candidates. There are other pockets of strength in financials as well, which I will share with you. Industrials remaining up here at the forefront, a real powerhouse, a very mixed group. And you can look no further than Caterpillar to see the strength in some of these bigger industrial names as the group continues to forge two new highs. Let's take a look at another area here that is beginning to perk up, and that would be utility stocks. The top performer up 3.3%. MACD now up here in positive territory. Another rather defensive area of the markets that's really picking up quite a bit is REIT stocks, real estate up 1.6%, forming the right side of this base, poised for a base breakout. And that MACD just getting into positive territory with a positive RSI. I'm going to be adding at least one REIT stock over the weekend in my MEM Edge report. If you haven't already, use that link below. You can trial the report for a very nominal fee. You'll want to get in front of this big grower as it begins to, again, form that right side of the base and break out. Now, from here, let's go ahead and drill down a bit further beyond those sectors, because it's really important. You want to get more granular in your work so that you can identify within those sectors where the potential strength or weakness is. And first up here, Homebuilders. They did falter a little bit as the week progressed, but still in a very nice confirmed uptrend. And a lot of this having to do with interest rates. We'll take a look at the yield on that 10-year Treasury, but that is helping the group. IHI, this is medical products, had this big gap up into a breakout. A couple of names there that really helped. Dexcom would be one, PODD, EW. These are names that have gapped up and broken out of bases due to strength or other, due to factors beneath the surface that are really improving the growth outlook for those names. Let's take a look at semiconductors. Now, I did talk about technology stumbling a bit here, and the semiconductor group was down 4% today, and you can see that pullback. However, on close inspection, we're going to take a look here at a weekly chart of the semiconductor group, and you'll see that we are certainly overbought and due a pullback. And net, we did end the week in positive territory. We're going to take a look at Broadcom, talk about what drove that stock to pull back, because again, today, the biggest part of that pullback in semis was did take place today, and due to Broadcom earnings, as well as another name that we're going to take a look at. So let's go ahead and move through these sub-industry groups here, because I talked about that yield on the 10-year coming in. We're down at about 4.1%. If we can get below that 4%, that would be ideal. But the net is we are seeing a nice, slow but steady decline in interest rates, which is generally good for the broader markets. Now, let's take a look at One other area in technology, this is the software ETF IGV. And the group overall was down 2.3%. And generally, it is in a weak position. Taking a look at this RSI. Now, this particular decline I talked about in my show 2+ weeks ago when we had the cybersecurity Palo Alto name come out, drop, and a number of other software cyber-related names also suffered. A lot of them are struggling to regain their upside momentum. And then we have seen the deterioration among software spread. Now, from here, what I'm like to do is go ahead and share with you a stock that had been a big winner in the software space. And it was one of the first shots across the bow, if I may. And this is ServiceNow, NOW. Here we are with that initial deterioration among broader software names. But for my work, I had added the stock to my MEM Edge report. Back here, we had experienced a nice significant gain. And when this deterioration, you see these leadership type names begin to pull back, you can have a sense that you are going to see weakness elsewhere in the group. And in fact, NOW, we did remove it from the MEM Edge suggested holdings list, and it's still struggling in line. Now, this could eventually turn into a beautiful buy point at some point. We are going to use the September into November period as precedent. If we can get the stock back above these shorter term moving averages, get that MACD black line up through the red and that RSI in positive territory, we could set up. But at this point in time, overall, we are seeing weakness in the group. So I'm not anticipating that to take place anytime soon. Some other areas that we can take a look at here. This is small cap, Russell 2000 index, top performer, up 0.4% for the week. And this is what you want to see. We want to see broadening out into these smaller companies. This is being helped by bank stocks. About 18% of the Russell 2000 is comprised of these smaller banks, but also it does point to a risk-on environment that's not really being supported throughout the markets, but nice to see these small cap names in a nice uptrend. So from here, let's go ahead and take a look at that bank group I talked about, utilizing StockCharts.com as a way to get in front of those stronger names and areas that are just beginning to emerge. So first up here is a view of the 11 sectors. And what we're going to do with the financials is go ahead and click onto that group. From here, you can go ahead and ask for the week to date performance. And here we are, bank stocks up here front and center. Now, the group is very large. There are a number of banks ranging in size, but what you will want to do is go ahead and sort this list by that StockCharts technical rating. And as those that may just be entering into this banking group, you will want to drill down and get to that, what I call a sweet spot. It's going to be anywhere from that 75, 85 area, but not without taking note of some of these names that are up here at the forefront. And up here, we have two Japanese banks. That's an area Japan's market continues to hit new highs. It's been faring quite well. Actually, we can take a look at Wells Fargo very quickly because of those bigger bank names. I did want to point out that this particular company has been in a very confirmed uptrend, and this big move here at last month had everything to do with the overturning of their fee that they were being charged because their asset managers were supposedly not following the rules, but apparently that has been overturned and the stock did enter a nice uptrend. But let's go ahead and move down further because from here, I did want to point out a name that is just now breaking out also in that large cap space. This is Citigroup. Take a look. We can see we have this nice base breakout forming the right side of this base, this nice black line up through the red MACD. Citi is among those banks that are first to report their earnings, but it's not going to be for another at least 5 weeks. Fifth Third Bank. Now I am getting stretched a little. I think I mentioned 75 to 85, but I did want to highlight Fifth Third Bancorp because it is another name that had this nice base breakout into an uptrend. So from here, I am going to actually, let's go ahead and add a 5-day simple moving average. When you have these base breakouts, from there, you will want to see if the stock enters into an uptrend, and Fifth Third has done just that. Also of note, black line up through the red, nice new MACD crossover. See if we can, I did have one other name that I wanted to share with you, but also equally as important is this concept of using that StockCharts technical rating as a guide to get you in front of these names that are just beginning to move. I do tend to focus on these larger stocks. Of course, Fifth Third is more of a regional bank. It's not a mega cap, but we can also see that JPMorgan has been in a nice confirmed uptrend. And when you see these bigger leading bank names in these uptrends, it will give you that confidence to drill down and take a look at some of these other banks that are a little bit smaller, but are acting really quite well. Another area that I did want to talk about today is that move away from some of these bigger retailers. So we're going to take another quick look at XLY, consumer discretionary, and that overall group, this pullback that we did see shape up this week. From here, we can take a look at the haves and the have-nots among these bigger names and talk about the differences between where they were prior to earnings, and then also the outlook for these companies. So first up, we're going to take a look at Costco. They came out with numbers today, and take a look, down 7.5%. Super big volume indicating distribution. I'm on the lookout for further downside as we've broken below the 10 and that 21-day simple moving average. Now, from here, what I did want to point out to you is a view of their longer term chart. So I'm going to pull up the monthly chart of Costco and let's take a look. Going into today's report, you can see on that big longer term view that RSI up here in an overbought position. And then also we had that MACD black line up through the red several months ago, but really at the upper portion of its potential range. So while the numbers were not good and it was due a pullback, a 7.5% decline having everything to do with the positioning of the stock going into earnings, pretty much priced for perfection. The stock was at a new high. Let's take a look at another big box name that reported this week, and this is Target. And we can see that the stock did have this super nice gap up, and it's retaining that gap up in a very bullish move despite deterioration elsewhere. From here, I'm going to go ahead and pull up that super long-term monthly. A lot of you may not utilize this that often, having worked with institutions for many years. This was a go-to chart because you want to have a longer-term zoomed out view of a particular name, particularly if you're a large mutual fund and you're beginning to put money to work in a particular name. Now, let's take a look with Target, TGT, on the position. Many of you who follow the markets closely will know that the company has struggled going back for quite some time. So in essence, this week's move, while it was up 11%, it also appears to have further upside. Take a look, this black line up through the red and the RSI just entering into positive territory. So that's going to be, for me, the guide as far as the upside potential. And then last up, quick look here at Walmart. They came out with earnings a couple of weeks ago, gapped up, but are remaining in a nice uptrend. So as you cycle through, for those of you that are looking at different groups and areas, again, you will want to use that longer term view. This is Walmart, still appears to have further upside from a bigger picture view. And from there, last up, We're going to take a look at Home Depot. They came out with numbers recently as well. And you can see that the stock is struggling a bit, pulling back. I will tell you this particular company analysts are revising their estimates lower. So certainly not as much of an interest for me from my work. But from here, I'm going to take us over to looking at Broadcom. Let's take a look at AVGO. This particular company, as mentioned, came out with numbers today down 7%. And you can see the stock is finding support at that upward trending 21-day simple moving average. Now, they did come in with earnings that were a bit below estimates, and that is hence the deterioration. However, the company provides chips that are very integral to data centers. Actually, their revenues came in below estimates. And that particular AI-related area is seeing a lot of growth. So in essence, it will be very interesting to see if that part of the story holds weight. And if we do see a move back into Broadcom going into next week, it's going to be important that RSI remain up here above 50. And we can see also, however, that today's volume was quite high on this pullback. We can also note with Broadcom that it has a history of breaking just below that 21 and recovering. So keeping an eye on the price action around that key moving averages. And ideally, if we can get that reversal take shape, and I will be keeping a close eye on it. This is one of the names on my suggested holdings list with my MEM Edge report. And that's it for this week's show. Everyone have a fantastic weekend. I'll see you here again next Friday.